Hello everybody. So today I have four pieces of news that I specifically want to discuss regarding to today's trading day. So the first update is Riot. You may have seen that Riot signed a deal for only 25 megawatts, by the way. They signed a deal with AMD. And of course, as is usual when these deals are signed, the stock pops. Riot popped 16% today, and it lifted all of the other miners. Riot is yet another Bitcoin miner who successfully transitioned to AI HPC, at least for a part of the business. This is a big deal, and this is also the reason why I own CleanSpark, why I own Mara, because both of those, especially CleanSpark, talking about their site near Atlanta as potentially being the next deal announced. CleanSpark, we're waiting for something from CleanSpark. It happened to Riot. I think it's going to happen to CleanSpark at some point, and I think we'll get a pop. I want to be in that stock before that happens. The same story here is for Mara. Mara didn't specifically talk about a GPU, but talked about high-performance compute, so perhaps a TPU type of deal to be expected from Mara. But Mara also is in that list of miners who are looking to use their energy, their cheap energy, and to shift those resources towards high-performance compute. And so this is the whole sector of miners is being very positively impacted by AI. I want to own this. I think the market was correct in October when it took all of these stocks way past $20. You know, CleanSpark was trading above 20, Mara was trading above 20. I think these stocks will go back there, and Riot is an indication that, you know, these deals are real and they're not going to stop. So that's why I'm happy about that. Let's talk about another company. Nibbius pops today. I didn't show the chart, but we're at 108. We went up at some point 6% at some point, trading the day towards 5%, finishing the day. Anyways, it popped. Why did Nebius pop? Well, it could be the AI HPC optimism, although I think people were quite optimistic about Nebius' growth. As you know, on this channel, I'm a big fan of Nebius because they will grow their revenue anywhere between 10 and 20 times in 2026. And that's because of that huge Microsoft deal, but also a very large Facebook deal. They're sold out, as they say, and it's 0.05 on enterprise value over GP over RG. I find this stock very cheap, but I think the reason why Nebius popped today is because of ClickHouse. ClickHouse did another funding round, and we've more than doubled the former valuation, which was in November. This has more than doubled. So ClickHouse is funding for a Series D round, venture capital VC round of Series D. It's funding at a $15 billion valuation. So now we say that Nebius owns 28% of 15 billion. That's 4.2 billion. That's a major chunk of money that I think is not reflected in that stock price. Because on a growth adjusted basis, the stock is already so cheap. I think a lot of the VC initiatives that Nebius has, a lot of the investment that it has, I don't think are properly reflected into the stock price. And this is the most true for ClickHouse, because I've kind of did a little research on ClickHouse, and I've seen engineers, including Tesla engineers, by the way. That software is used by Meta, Tesla. Okay, these other ones are smaller companies, but Meta and Tesla use ClickHouse. I've seen engineers praise ClickHouse, saying how it can handle enormous data sheets, much better than a Snowflake, for example, they said, and perhaps even better than a Databricks. I think ClickHouse, potentially with time, could be the size of a Snowflake or a Databricks, which, if that were to be the case, you'd be talking about, like in the case of Snowflake, a $70 billion company. That company was more expensive too back in the day. So, you know, eventually, as AI become more prevalent, you could be talking about, you know, perhaps 5 to 10 years from now, $100 billion company, perhaps 15 to 100, and they own 28% of that. So over the long run, just the present value of the future value of ClickHouse, the expected value of ClickHouse, and what it's going to be worth 10 years from now, I think may not even be reflected in the current enterprise value of Nebius. So to me, this stock is still being slept on. People are still not looking at this stock and taking it seriously. Moving on to a third company, it's Bitmine. So as you know, on this channel, not the biggest fan of Ethereum companies. I mean, they're fine if you want to diversify your bets. I've said before that I prefer SBET to Bitmine, mostly because SBET was the first to do that. Bitmine came in late into the game, and I've been following that game pretty closely. But when I look at this investment, I do not understand. So Bitmine invested 200 million in Beast Industries, which is Mr. Beast's company. And I'm sure Mr. Beast company is a great company. There's no denying that he's, the world's best influencer. I'm sure it's a great company. But how is that related to Ethereum? I struggle to see, and he's not specifically talking about, I don't know, are you going to do a Beast NFT? Like, is that sufficient to justify this type of diversification? Here's what I think happened. I think Tom Lee, because of his connection, I think he got an opportunity to invest in Beast Industries. Where did he get the money to invest in Beast Industries? He got the money from Bitmine, essentially. I think because of his connections, he had an opportunity, and he brought it into Bitmine. And so Bitmine now, they own a little Bitcoin, they own a lot of Ethereum, and now they own a stake in Mr. Beast. And it seems out of place, and it seems like Bitmine is transforming into a quote-unquote pure play Ethereum company, pure play treasury company for Ethereum, into more of Tom Lee's investing fund, right? Tom Lee's fund that is not an ETF, because remember, he also has Granny Shots, which is an ETF. So I don't know. Is he trying to create a mini Warren Buffett, Berkshire Hathaway style company? I don't really know. I will qualify this as strange. It's a strange move, and I think if someone only believes in Ethereum and doesn't want to have access or doesn't want to believe in investing in Mr. Beast, I understand why they want to sell. Weird is the word I'll say on this. Weird. He could make money, as he says in this Yahoo article, potentially a 10x. You could potentially make it an X on it. You could make money, but people who want to own an Ethereum treasury company, they usually believe in the thesis of Ethereum, not necessarily believe in Mr. Beast. So anyways, that's strange. There could be interesting discount, right? Typically companies that are so scattered, so diversified, they trade at a discount, right? Look at Google. Imagine if Google was not this giant company, but if they had YouTube trading at a discount, Android trading separately, YouTube trading separately, Gmail trading separately, Chrome trading separately, Google would probably be much more valuable. This is probably the same for BMNR. I expect this company to keep trading at a discount, especially if they diversified in an ununified manner, which seems to be the case. And the last company I'll cover is Reax, the real brokerage. So as you know on this channel, I believe real estate is going to be disrupted. My play in the early days of the channel, it used to be Open Door. Now I've shifted. My new play, of course, is Reax for real brokerage, mostly because I see it in my area. I see a lot of top brokers moving to them. Reax is a very interesting commission system where you stop paying commission after so many sales, and so all of the top agents are incentivized to move to real. And the top agents, they've been growing despite the glut that the real estate market has been in. They've been growing. How have they been growing? Because they are stealing, quote unquote, stealing all of the great agents from your local mom and pop broker. That's how they've been growing. And it's my bet on real estate. And you may remember on Jan 12 when the government bought, was it hundreds of billions worth of mortgage-backed securities, something like that, the stock popped. That was the correct reaction in my view. Well, it almost lost all of its gains. This market is entirely ignoring this stock. It almost lost all of its gains again. But if you look at the Fed 30-year average for a mortgage rate, actually we are at a 6-month low roughly. We're roughly at a 6-month low here. So we've been dropping quite a bit on the 30-year. A lot of people rejoicing also about HELOCs. HELOCs are very cheap, are apparently getting much cheaper right now, and we may have even more catalysts to real estate. It seems very clear to me that Trump is trying to kickstart real estate again. Makes sense. He's a real estate guy. Anyways, it seems like he's trying to do something for real estate. And so you could have a pop in real estate in the U.S., down payments from 401k. Apparently, you could be allowed to borrow up to 10% from a 401k to now do a down payment on your house and put equity of your house in your 401k. I don't really know how that would work, but he's working on some announcement, and we already know from a few months ago now the 50-year mortgage. That was another thing. So my guess is that there's going to be some change in 2026 in real estate, and that could be very bullish change. And in my view, a company like Reax will overwhelmingly benefit from this as the fast growing broker of this era. I've covered Reax a few times on this channel. I like the stock quite a bit. So anyways, these were 4 things to cover. I tried to go fast. There's a few more things to cover, but I'll cover them tomorrow. Thank you so much for watching. This was not investment advice. This was not financial advice. This is only entertainment. Please like, please subscribe. Follow me on Patreon. Follow me on X. And again, thank you for watching.